Hello everyone, a very good morning, good afternoon, and good evening to all of the viewers from around the world. This is your host Vaibhav. In today's session of JForex Indicators Explained, I will be looking into the concept, the uses, the properties of a indicator which is used to determine the strength of the momentum of the indicator. So this indicator, the name is price volume trend, which takes into consideration both the price change for the instrument of our choice. It can be any instrument. There is a indicator which will work just fine with almost all of the instruments available to trade on the J4X 4 platform. It takes into consideration the percentage change in the price, and along with that, we also look into the volume, the force behind that price change, and depending on whether the price is rising or declining, the addition or the subtraction of that multiple takes place, giving us these indicators output value, which then can be utilized to look for the opportunities to trade with in a profitable manner. So for this indicator, you can go for two options: add indicators or quick search. If you simply type in the V PVT, you will get it, price volume trend. Or if you want to know where this indicator is listed, all you have to go is go to this volume indicator options, and here you will get it just below the on balance volume, which we saw in the last session. Now, there is the chart, which is more of an signaling mechanism where you can look for the entry and exit depending on how this thing is unfolding. And the concept of this indicator is quite simple. We simply look at the price change. As you can notice, just in the last hour, we had this significant move happening in the Euro USD, in which the euro has declined against the dollar by almost 100 pips, not exactly, but roughly 100 pips. And if we look at the plotting of this indicator, you can see that there is this decline in this PVT output, which has now gone to negative 206.51 compared to the earlier prior reading of 231.67, 231.67. At the same time, if we look at the signal output, it is rather stable because this signal line is simply the 21 period moving average of this PVT line. So as and when there is any significant change, that will be immediately reflected in this graph, in this charting of the PVT, but it will take some time for it to impact the whole of the average price, moving average price of the PVT. And that's why we utilize this combination of these two lines, the PVT and the signal lines, as a indication to look for the entry. That is also one of the classical interpretation of this indicator, where you can go for a buy trade when you see the PVT line crossing above the signal line, and can start looking for a sell trade when we have a bearish crossover where the PVT line, the price volume trend line, drops below the signal line. So you can utilize this as a classical measure to look for the entry and exits depending on how much the price volatility is there. And if you feel that there is this significant move which is also sustained at least for a couple of candle periods, if it is drawn using the hourly time frame, then at least for a couple of hours. If the candle period is of different time frame, then depending on that, you can take it in some multiple of the candle period. So that way you get the consistency, you get the stability of the pricing move, and you get to trade as close as possible to the trend change. Whenever it happens, you can simply jump in, and you can utilize this indicator to get the confirmation with the parameter, one parameter being volume. You get to know the force, the strength of the force driving the price change. So only if there is a significant enough turnover in the volume, if the bid and the ask both are shooting up while the price is moving significantly in either direction, you get to know that this momentum, this particular price change is more likely to sustain compared to the earlier price changes simply because there is a higher interest by market participants, and that means something. That means, at least for a trader, that means the interest is quite significant enough to warrant the continuation at least for next couple of periods till it wanes. So that's how you can utilize the indicator, which takes into consideration the price moves as well as the volume data. So this is you can say a modified version of the unbalanced volume. In unbalanced volume, we simply do a cumulative sum or subtraction, addition or subtraction. Here we look at the price change in terms of the percentage. So whatever was the last candle period's price, that is compared to the current candle period's price, and that price change is then taken into the percentage format, and we then multiply it with the volume change for the current candle period, and that's how we get this PVT. Then that price volume trend is again used to derive the signal line, which is simply the moving average price of this PVT. So that brings in the stability. This is a modified version of, you can say, OBV, and more sophisticated, more stable, and also it takes into consideration more price points. So you have this reliability, I think, higher reliability for this indicator, and also the inference is easy to draw. You can simply take a one glance on these indicators plotting, and you will be in position to immediately make the assessment. And maybe if you feel like, you can go for a initiation of the trade also. Now, if we simply take into consideration the examples from this week only, here we had crossover happening couple of times. If we go back to the Monday, here we had this crossover on the bullish side, and that was well sustained. And if any of you were to use this indicator, you would have made significant amount of money that day. Then we had this crossover on the bearish side later in the day, and it also continued, though the gains would have been limited, but still it continued. Then we had this crossover on the bullish side in yesterday's session, which didn't really go much of the distance. It simply stayed there for a couple of hours, and then it went into the negative territory. So here, most probably, this trade would have ended up in loss. Then we got the confirmation on the sell side. So if you were to go short, then you would have almost gotten the opportunity to exit in profit, or at least on a small profit, if not big enough. And then again, we had this crossover on the bullish side, which was sustained. Here also the gains would have been limited, but you would have got enough of time to see this price action of the Euro USD stabilizing before turning bearish again. So this indicator, I think, does a fair job. No indicator is perfect. You are not going to get the signals which are going to work all the time. But if the signals work most of the time, or you can say more than half of the times even, then getting the risk reward right and the risk management right, you can go for the initiation of the trade whenever the signals are generated by simply using this classical method of the crossover between these PVT and the signal line. So that is the one way to use it. You can always come up with novel ways to use this indicator. You can always try to get your own observations applied to the uses of this indicator. So I would suggest that you explore and see what are the newer ways in which you can utilize this indicator. So that will add to our cumulative knowledge. You can always discuss any new formation here on this forum as well. Now let us consider what are the editing options provided to us on the platform. We have this choice to determine the kind of moving average we want to use to get the signal for signal line drawn, and for that we have these all types of moving averages available. So depending on the kind of moving average price you use to define these signal lines, you will have sort of deviation, and of course the signal generated are also going to vary. So you will have to pay attention to this charting of the indicators output with these different moving average types, and then you will have to decide which kind of moving average is serving your purpose best, giving you good enough stability as well as the probability of higher probability of getting the trade right, and then you can go for that moving average of your choice. So you will have to try it out and then determine for yourself. There is no here magical formation which is going to work all the time, so you simply have to determine which is going to get you on the positive side, which is going to keep you on the positive side, and then work with it to optimize the setup. You can also vary the signal smoothing length. You can vary this calculation period. You can lower it, you can increase it. Suppose for example, if you simply want to use the lower calculation period of 14, you can do that as well. The only thing is that then you will have a lot more fluctuations compared to what we were getting when we were using the higher time frame of the 21, but at the same time there is going to be less lag between these signal generated. Whenever there is good enough of price move in percentage term, we will have a fresh crossover happening in this indicator. So that is something to keep in mind. And as I had explained to you while talking about the moving averages earlier in this series, when we were looking into the various types of moving averages. There also I had talked about these drawback, or you can say a trade-off to be made between the calculation period, whether you want to keep it larger, longer, or if you want to keep it shorter. That's the trade-off you have to decide for yourself. And there is always this choice between the reliability and the responsiveness. If you use lower calculation period, then the responsiveness is going to be much higher. If you use larger time frame for the calculation of the moving average, then the reliability is going to be higher. So there is this trade-off which you have to see to resolve. You have to try to get it defined, the parameters defined in a such a manner that this reduces the overall negative impact, or you can say cons of the indicator, while extending or increasing the pros of the indicator. So let us again go to the editing panel. Now I am going to restore it back to the default 21. Then comes the output parameter. Here you get to fill up this difference between the two lines, the PVT and signal lines. You have this mechanism to define these trend up and trend down, color combination, the styling factor, weight, and also the transparency. So all these options are there, and color combination can also be varied. I think this color combination is quite good enough, but if you feel like, you can always vary the color combination also. You give this option to work with these color combinations. And suppose for example, let's try out a different color, white one, and instead of red, now we have this line drawn on the white colored, in white color. All right, then comes the question of adding level. Since this is a unbounded indicator, it is very difficult to define certain levels which are going to work for you all the time. So you have to simply get the observation, and accordingly you can come to a decent idea of the kind of levels which are likely to prevail most of the time, not all the time but most of the time, and then you can draw your own inference from those kind of output values. But it is very difficult. Maybe you can add 0 as one of the level, so you get to immediately assess whenever there is trend change from one side to another. But this is not a solution which is going to work all the time. There is more of an mechanism to keep things simple for you to read into. All right. Now let us try other combinations as well. Advanced, recalculate on new candle only. If you want this indicator to give you stable values throughout the current candle period, even though the current candle's closing value or applied price might keep fluctuating throughout the current candle, in that kind of scenario, to bring in stability, you can opt in for these options. If you want the calculation period to be highlighted, you can do that so that it becomes easier for you to read into, or simply just keep in mind the calculation period for the indicator, so that makes it easier. The calculation can be customized further. This indicator is going to work with almost all of the instruments provided on the platform. You can use it in forex, you can use it in commodities, you can use it in equity segment. So all these instruments are covered, and more or less this indicator works fine with almost all of these instruments. The candle period can be also used from the chart. So whatever is charts candle period, the indicator will be simply calculated for that candle period. But if you feel like that though the charts candle period needs to be kept fixed, or if you want to vary it but you want the indicator's calculation period to be drawn from a certain candle period, then you can define it that way. Now here the chart candle period is hourly, but if I want the calculation of this indicator to be done with each candle period defined at half an hourly, I can do that as well. So here this indicator's output is now being defined differently, with each candle period being of 30 minutes each. Even if I change it to say 5 minutes, still the calculation is being done with the predetermined parameters of 30-minute candle period. Okay. Views from the chart. Now I am restoring back to the earlier option. The spread side, ask or bid. We get these two options used from the chart, or you can have these two options. There will be slight difference, but more or less the trajectory is going to be similar unless there is too much of a fluctuation between the ask and bid. If you want the indicator to be available on all the candle periods, you have to opt in for these options. Else, you can go and individually define on which candle period you want this indicator to be available, so that only on that candle period this indicator is going to be available. And if I change it to say other candle period, we won't have the plotting of this indicator. So that's how this system works, so that you, if you feel like, you can add multiple indicators on different time frames, and then you can collate that data to draw a inference to trade with. Okay. Base period can also be varied. Let's see if it is going to make change. Yes, it is indeed going to impact. So you have to define the base period after due observation. There is no fixed formation which is going to work all the time. So my suggestion is you try it out, see what kind of base period works out best for you, and then go and use that base period. So that's all from my side for today's session. If you have any query or any idea to share, you can write back to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to uh, remind you that if you want to try out these newly released trading platform, the link has been included in the bio, so give it a try and let me know how it works out for you. That's all from my side. I'll be back tomorrow with a new indicator, new concept, new uses, new properties. So we will talk about that in next session. Do come back. See you tomorrow. Goodbye.